The stock is coming up into resistance, right up into the bottom of the Fab4 resistance. On the 5-minute chart, the stock is coming up into the area of the overhead 200 period moving average resistance. And this is what I mean by dual resistance. When you have a resistance point on your battle time frame and a resistance point that coincides in the same area with another time frame that you're not trading, whether that's the 5 or the 15 or something. Now, it doesn't work so great all the time on bigger time frames. Like if you're playing the 2, resistance on the daily is not as relevant because the resistance on the daily is too far away. It's like saying, oh, there's a breeze on Pluto and you're on planet Earth. Well, it's too far away for the breeze on Pluto to be relevant to you on planet Earth. There's a storm on Pluto. Doesn't matter to you if planet Earth. But maybe if there's a storm on Mars, maybe that can have a little bit of an effect on planet Earth. So you follow what I'm saying? You can't look for things that are too far away from your trading time frame. So the 5-minute, the 15-minute, all right, those are good time frames. They're close enough to be relevant. Okay, so this is what I mean by dual resistance, where you have resistance on your time frame, on your trading time frame, and a resistance point that is coinciding with that same resistance point or area on a non-trading time frame, the 5 or 15. All right. And when you have this, it creates a higher reliability trade. You got a higher reliability trade. Now, the thing that I always have to keep reminding traders of, because I see this mistake too often, is that you demand the market to be too specific, and you can't do that. It's got to be good enough. It's got to be an area. It's in the area. It's not. So you can't say, well, Apple didn't quite get up to its resistance. No, it did. It's in the area. You can't say on the 5-minute that, oh, it didn't quite get up to its resistance. No, it's in the area. That's good enough. You can't demand from the market that type of specificity. You can't. All right. It's close enough in the area. All right. We also see on Apple's secondary rally, we come right back to a declining 20-period moving average. And what's really neat about this, traders, what's really neat is that you always judge this based on the entry. If you were going to take a color change short here in Apple right off of the declining 20-period moving average, so once green is broken, so that's your entry, more or less. Okay. You're right. That entry is right around the halfway mark. Boom, boom, boom. Do you see that? This is, in a way, combining two other things. All right. First, we're combining resistance on the 2 and resistance on the 5 in the same price area. And here we're combining a turning point at the declining 20 with the 50% retracement turning point. When you get these dual things that come together, it's almost like a weight of the evidence type approach, right? It's more important. The item itself is playable, but if you get something else combined with the item, it takes an exponential jump in terms of relevance, importance, and reliability. And so I want you to always be cognizant of these combinations. And there really aren't that many. There really aren't that many. So that combination of I'm up against 200 on the 5 and bottom and price support, or bottom of the Fab 4 on the 2, that's a common one. The way you might see it in support is there was something I saw on support today. Let me see if I can find it. If I can remember it, not necessarily find it. So on the 2-minute, take a look at Starbucks today, which was a nice, beautiful winner. This is, if I'm going to go long in a bear market, this is the one. The surge off of the 200 period moving average area. Now remember, that 200 is not skinny in real life. It's skinny on the chart, but it is not. It's actually a cushion. All right. So always think zone, right? Okay. Now, if you take that, if you quickly check the 5, you've got the same thing on the 5. Now, guys, if my go-to long, especially in a bear market, is the power surge off a flat 200 period moving average, and I've got 2 of them, not just my battle time frame, my trading, but I've got the 5-minute 2 or the 15-minute. OMG. It takes an exponential jump in terms of relevance. It takes an exponential jump in terms of reliability. Very, very powerful. And so I want you to be cognizant of these combos. All right? I want you to be cognizant of these combos. I like that area too as well on the 15. All right. Questions here from Irie. Is a narrow Fab 4 worse than a wide Fab 4? No, narrow Fab 4s are the most powerful Fab 4s. All right, don't ever forget that. Narrow Fab 4s are the most powerful Fab 4s, and it's a simple reason for that. It's because it means that your stock has gone to sleep or has inhaled. So wide Fab 4 is this, and then you come back to this, and that narrowness tells you the stock has gone from wide to narrow, and that the next state is wide again. The question is it wide this way or is it wide that way? So here you have narrow state. So the question is this going to come out of the narrow state to the upside or downside? Is it going to come out of the narrow state down here? Or is it going to come out of the narrow state up here? You don't have to know that in advance. Just whichever one happens first. Boom, that's your buy. All right. And the rest is history. Automatic add on the first color change. Boom, profit take. Boom, profit take. Boom, profit take. Powerful, 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 powerful. And so you always, when you have a stock moving to something or starting from something, listen to me carefully. If you have a stock moving to something, here is the moving to something, guys. So you're moving. Apple is moving to resistance. Okay, that's the resistance area. So Apple is moving to resistance. You want to quickly check the 5 and the 15 to see if that this area is also coinciding with something on those time frames. Boom, it's coinciding with the 200 in that area. All right. And if you get something on the other time frame that's also confirming the resistance or support, that play gets exponentially, that play gets double the importance. All right. That's coming to something. The Starbucks is the starting from something scenario. So when something starts from something, so I'm starting on my 2 minute, I'm starting from the 200. Let me just quickly check to see if another time frame, boom, confirms or gives me something else. Yes, it's starting from the area of the 200 there too. This gets double the importance. And this can become very, very useful when you've got too many plays. You might have 3 plays off the open and you're like, well, which one do I do? Anything that has a dual starting point or it's moving to a dual resistance or dual support area, that gets in front of the line. Versus anything that's a play, but it's just a singular play. All right. So you have to, all master traders, they know how to rank their plays. Do you understand? They know how to rank their plays. So if you were to give them 6 plays, they would know how to rank them in terms of importance. All right, these 2 are the most important. These 2 are the second important, and these are the last important. They would know how to rank those 6 plays. And that's what I want you to do with this dual concept. All right. Loke is saying Uber as well also had a 15, had something dual happening with it on the 15. Let's take a quick look. All right, so here is the 2 minute time frame of Uber. We're coming to something, right? So we're coming to a declining 20 period moving average. On the 2, let's see, on the 15, yes, beautiful. That was also coming to an overhead 200 period moving average. Wow, wow, wow. So we've got dual areas of resistance, right? Let's get that other one back up there. So we've got, let's do this one, Uber. Here this on the 2, it's coming up to the declining 20. We get a beautiful bear 180 sell setup there. Color change, boom. There's your entry, which also happens to be right off of the resistance point on the 15. When you get these dual points, the relevance, the importance, the reliability goes through the roof, guys. Very, very beautiful. All right. Trish says, this is amazing. My first time here. Awesome. Well, welcome, Trish. Welcome. All right. Who else is here for the very first time? Type the number 1 if you're here for the first time. I'm curious. Type the number 1 if you're here for the first time. All right. Tesla coming from the Fab 4. Tesla was a nice short this morning, guys. Look, there's your Fab 4 on Tesla, right? Starts right at the perfect location. Boom. First color change mandatory. Boom. Boom. The rest is history. Boom. Whale complete. Beautiful. Beautiful play this morning. What is the 5 saying? Oh, look at that dual location. Woo! So you've got the same location on the 5 as you do on the 2, right? This is beautiful. Right? Beautiful. Dual areas of resistance. The reliability is so much higher. Beautiful. You got the second leg there, Andrew? Nice. Okay, cool. Powerful, powerful, powerful. All right, guys. So take this concept, take this dual, always check if, remember, you're doing it on 2 scenarios. If your stock is coming to something, all right, check to see if that area of resistance or support that it's coming to is also being confirmed by another area, the same area of support or resistance on another time frame, the 5 or 15. If your stock like Tesla is starting from a location, check to see if on another time frame that location is being confirmed as well. And if you've got more than one time frame confirming together that an area is powerful support or resistance or a powerful starting point, you have a play whose odds just go through the roof of working. All right? Very, very powerful.